Hey, thanks so much for tuning in today. I've got another one for you regarding the Federal Reserve. This one's brought to us by Yahoo Finance, who has taken it from Business Insider. The article says investors are forgetting the pain before the pivot and failing to see the debt disaster ahead, according to experts. Let's take a look and see what it has to say. The quick summary says that investors are forgetting how brutal the period before federal rate cuts can be, said Stephanie. Rate hikes cause delayed damage, and rate cuts don't work instantly, the Macro Mavens founder said. Pomboy expects the delayed impacts of higher interest rates to hammer households and businesses. Does not sound good. Let's continue. Investors can't wait for the Federal Reserve to switch from their raising interest rates to cutting them, as they expect that to boost the economic growth and send stocks higher. They're overlooking, however, the brutal fallout from the central bank's heights that will precede the policy shift, according to Stephanie. Quote, the markets don't seem to be anticipating the pain before the pivot. They're just anticipating the pivot. She continues, the impact on the economy and then the corporate and household credit situation will be so severe that they'll take rates down dramatically. And of course, the rates that she's referring to, it's the 40-year high inflation that caused the rates to go up. They went up from 0 to over 5% within an 18-month span. And again, according to Stephanie, there is a delayed impact when these interest rates go up. Inflation at the moment is about 3% as of June and July, not far off from the 2% target that the Fed has, and the economy has been showing some signs of cooling. She continues that the story is very much in front of us, and this market feels like it's rallying on hope and very little of actual fundamentals. Yikes! Many households and businesses had locked in lower rates, but a growing number will have to service debt requiring far higher interest loan payments, she noted. As I mentioned before, the economists noted that when the Federal Reserve does start to cut rate hikes, the relief will take some time to flow through the system. There is kind of a lagging effect. Stephanie's words, people are licking their wounds at the moment. She predicts that when the Fed does pivot, many Americans will be wary of taking out loans or hiring people or investing in businesses after weathering such a financial rough patch. Quote, after the housing bubble bust, they refused to even borrow on their credit cards for a long time, and they were so chastened that her quote, after the housing bubble bust, they refused people to even borrow on their credit cards for quite a long time. And she predicts we are definitely going to go through a period like that. I'm assuming she's referring to the '08 housing burst we had experienced not too long ago. But again, you tell me what you think. If you had a crystal ball, what is your prediction on what things might look like 6 months from now, a year from now? When does the Fed pivot? When do interest rates come down? When does stock market go boom? You tell me. Thanks so much for checking in. Looking forward to it next time. As always, stay informed, stay curious, and continue researching. We'll see you next time.